Hi all, Kim Tucker here. I know I usually type out a blog post for our email, or I type out something, but I wanted to share. This is an Excel spreadsheet that I have been using lately to look at rates of return on mortgage notes. It kind of helps me figure out, if I were to buy a certain part of a note or all of a note, or it just lets you play some what ifs when you're buying a mortgage note. And what kind of prompted this is I was talking to a friend the other day, and they were telling me they had just received, had a bank CD return, and their return was 8.8% return on investment. 0.8. So let's take a look at that. I've let the cat out of the bag there. You've seen what the return is. But he probably, to get that 0.8% return, probably had to invest $100,000 to buy the CD, and he had to probably have it in there at least a year, maybe more. I believe that's what he had. $100,000 at a year is what I think he had. But let's say we don't have $100,000 to invest in a bank CD. We only have $10,000, and we're lucky enough to invest it and get 0.8. And that's not 0.0. Now let's try this again. $10,000. What's $100,000? I can't type today. $10,000 times 0.08 would be 8%, and we want 0.8%. So we need to add another zero in there. And the return on $10,000 with a year investment is $80. Not even really worth the time. Now let's say he had gone out, and you go out and hunt, and you're lucky enough to find a safe return on investment at 2% on a bank CD that you can invest only $10,000 in. And if you calculate that out, that's only $200. And if you were going to take that $200 over 5 years, what is that? 200 times 5 years would be $1,000. Always check with a calculator. $1,000. So not that great of return. And then if we went to the stock market and calculated that out, I've always been told that the average rate of return at the stock market is 12%. So a $10,000 investment for a year is $1,200. That is, if you get your 12% rate of return, the value of the stock doesn't fluctuate greatly and drop to zero or drop in half, which in the past 10 years we've been seeing that happen. So right now, I think when I'm recording this, I read this morning the stock market's doing great, but some major natural disaster could happen tomorrow and mess up everything on the stock market. So let's go to my note quoter. I currently have a note I'm using for an example. This was a non-performing second mortgage, meaning that the person had borrowed money. In the case of this note, I think they had borrowed like $12,000 as a second mortgage. And then they had something bad happen to them over the last downturn, and they had stopped making payments. We contacted them and had some conversations with them, and they agreed that they wanted to start making payments again. They paid us $5,000 right up front to reinstate the loan, and we negotiated that, this is the value of that they owe us, this is the interest rate they're going to pay, and they're going to pay it over 12 years. So far, on automatic withdrawal, they've made 9 payments. It just automatically, so they have 135 payments left. So I could go out, and this is what I expect over the next 135 months. I am going to get $182.29. $182.29. Got to clear this out. $182.29 times 135 payments. I'm going to earn $24,609.15 less the face value of the note of $1725. $275. I'm going to make $7,000 over the next 12 years based on this is the principal balance. But I can, if I chose, I can go sell this to someone else at face value. I could go sell it to them for face value. Actually, now what's left is $16,589.16. or I could sell part of that. And I know I talked to a lot of my investor friends, or not necessarily investor friends, my friend with a 0.8%. He's not opposed to buying a note, but he doesn't want to have his money tied up for 12 years. He wants a shorter term investment. He'd be more comfortable with a 5-year, which is a 60-month. So I can take a look at that in this chart. So if I were to say he wants a 7.5% return on his investment, and he only wants to buy 60 payments, that would be $9,097.27. I've done some pre-calculations. So we want to know what the return on 60 payments. So 60 payments of $182.29 is actual cash in a pocket of $10,937.40. If he spent that $9,097.27 to buy 60 months or 5 years, his cash in his pocket will be $1,840.13. And keep in mind that $1,840.13 would be interest, so it's going to be taxed less than if you were going out and earning $1. So yeah, you're earning interest at the stock at the bank and in the stock market as well. But just keep that in mind. And then let's say he wanted, 7.5 wasn't going to do it. Let's say he wanted to do a 9% return. He could pay me $87, $81, $55. So if we figure out how much he's going to get back in his pocket, $10937.40, and he wanted to pay me $8781.55, that puts $2,155 in his pocket over 5 years. So I can keep playing with interest, with yields, and coming up with numbers, but I just thought it was kind of interesting that I could probably beat the stock market if you figure I don't have a lot of volatility in selling a note, and I could help someone out that didn't run out and get 0.8% return. I have some of these that I can offer. I'd just like to sit down and talk with some people and show you how it works. So if you're interested in learning more about how partial payments, actually let me show you one more thing. So for buying a partial chart, it kind of makes more sense if, or a partial mortgage, it helps if you can see a picture. So I have this whole mortgage, the dark blue, these are the payments that I'm getting over time. And so as I get each payment, the face value of the balance of the note goes down till I get to the very last payment that's at 0. And if I sell 5 years of it, this will be what they're purchasing, the person purchasing 5 years would have, and they'd receive payments till it's 0, and then I get the remainder of the payments. Or I could go in and sell another part of the payments again. So I just think this is really interesting, and I really just wanted to share it with you. Again, if you have any questions on buying income streams, please give me a call. I'd love to chat with you.